Hi, welcome to this course on analysis of financial statements. I am Ramesh Kumar, a chartered accountant, and right now working as a virtual CFO for a group of companies in Chennai. I am also a forensic auditor right now. So, in this course, what is that we are going to learn is something first we'll have an understanding, and then we will get into the subject. Fairly speaking, you guys are all commerce students who have got understanding on how accounting is done. But today, this course is not something which we would be doing to make you understand the accounting part once again. Idea is not to make you learn accounting here, but our idea is to give you insights on how that accounting which you are doing now is going to be used by the so-called corporates. Say, for example, you have entered into a audit firm in future. So how does that audit firm use the accounting information which you have populated? Or else you have got into a equity research firm. So how does that equity research firm use the so-called financial statements which are prepared using the accounting? So this is something which we are going to learn rather than the regular accounting practices what you would be learning in your so-called degree. So this is the background as to why this course has been capsulated. So the idea is to give you insights on how corporates look into the accounting which is used, and also audit firms, how do they use the accounting which is done, or various stakeholders who use the financial statements which are prepared, is what we are going to learn in this entire module. So the context what we are going to go through is given in this sheet for you. So we'll quickly have an understanding of what all we are going to learn, and then individual topics, let us get inside. So to start with, we would be looking at introduction to financial statements, how the financial statements are being prepared, what are the basics of accounting, and then we will understand how assets and liabilities are defined with some examples. In fact, these are something which you already know, but unless we brush up your basics, it might not look proper learning for the entire capsule to get through. And then we will look through how financial statements are generally prepared. Financial statements, I mean to say the balance sheet, P&L, and the cash flow statements predominantly. And then how different is a current and a non-current asset or a liability. And then we will look at few case studies on current and non-current assets classifications. And then how profits are generally accumulated. And then how they are accreted in the balance sheet is what we are going to discuss. So then we will move to some key terms to be understood while analyzing a financial statement. So we will have to go through and understand how inventory is accounted, how inventory is looked by various stakeholders, because inventory has got a lot of information which is supposed to be dwelled into to understand how it is being used by the organization. So that is something which we will look through. And then we will learn about how property, plant and equipment is accounted, and then how depreciation is supposed to be accounted, and what is the importance of depreciation in the financial statements is also something which we will go through. And then we will also run through how trade receivables are accounted, and then what is the nexus between trade receivables and stock. So how are these two interlinked is something we will understand with few examples. So that's broadly what we are going to understand in this particular section. And then we will go through the various financing methods. What are the 3 thumb rules of finance is something we will understand. And then what does long-term versus short-term mean? Where long-term funds are supposed to be used, where short-term funds are supposed to be used, how fixed costs are supposed to be understood, what is leveraging of your costs is something which we will learn, and then cost of money is supposed to be understood. These are various aspects which we'll be understanding in financing. So that means, so if I borrow money, at what rate am I supposed to borrow, or for what purposes am I supposed to borrow, what is the risk appetite what I have, is something which we will deeply understand. And then we will move towards analyzing the financial statements at this juncture, because now after completing these 3 modules in the analysis of financial statements, here comes a place where we will start understanding the financial statements using ratios. What does ratio analysis mean? and how ratios will help us strengthen our fundamentals, that is with about the company, or understand the company better, is something we will be looking at. And then we will also look slightly about valuation, because generally investors perspective generally is based on the valuation, whether the company's valuation is going to be better day by day, or is it going to decrease, or is it being stagnant, is something which we look at. Those are some aspects which we need to understand. And then need of valuation and its significance while analyzing financial statements is also supposed to be understood. And then we will understand what does face value of a share mean, or book value of a share mean, intrinsic value of a share mean, and then how earnings per share is calculated and what is its relevance in today's current scenarios. How is it being calculated is something we will see. And then inside earnings per share, there are two categories. One is called as basic earnings per share, second the diluted earnings per share. How are they calculated? What is the need for calculating two different earnings per shares is something which you will understand. And then how to calculate return on investment. So that's basically about the money invested by me. Is it giving me X percentage of return or not? Whether that is in line with the market or not is all we will be learning here. And then return on capital employed. So now this is the place where we need to understand what does earnings per share mean, or else what does return on investment mean, what does capital employed mean, what are the differences between all these terms is something which we would try to understand. And then the most important, we would learn through DuPont theory basics. So this is something which is very critically to be understood, because DuPont theory is something which would tell us whether the analysis of a company is properly done or not. And then we would have a lot of insights using the DuPont theory. Using this DuPont theory, whatever we have learned, we would now go ahead and understand how returns are going to be calculated using this DuPont theory. And this is going to be done with some examples. That's broadly what we are going to discuss in financial statements analysis in this part B. And then we will move forward to part C, which is understanding the cash flow statement, in which we will learn what is cash flow from operating activities with practical insights. It's not just the structured discussion alone here. And then we would understand how investing activities are supposed to be analyzed, and then financing activities are supposed to be analyzed with some examples, that is case studies. And lastly but not the least, we will also understand how consolidated financial statements are going to be prepared, and how do we read through the consolidated financial statements. What does a minority interest mean, or what does a non-controlling interest mean? What does cost of equity, cost of control mean? So these are various terms which we need to understand, and that gives us insights on how we would take through the financial statements and analyze a consolidated financial statement. So broadly, this is what we're going to look through in consolidated financial statement. And lastly, on analyzing all this information, how is that going to help the management to take informed decisions? This is something very critically important for us, because the very purpose of analyzing is to take decisions at some point or the other. So how are they going to be used by the entity's management to take informed decisions is something we will discuss. We will understand what net worth of a company mean, and then what are the various methods of calculating net worth, and what are the tools available for comparison of net worth is something we will discuss. And then we will understand the usage of this with some practical examples as well. So broadly, this is what we are going to cover in this entire module of the course what we are going to run through you. So happy learning. We'll start with the concepts hereafter.